order filled.
Alright, what's good everyone? So in today's lesson, we're going to be going in depth on market maker models and Power 3, explaining how they interlink and how we can trade them, how we develop higher time frame narrative, a higher time frame bias with market maker models and with Power of 3. We're going to do that by breaking down the trade execution that I've taken today. As we can see, I had taken NQ longs, catching just over 140 points. So we're going to be breaking that down in depth. Now, you guys know I trade three things. They're all very, very similar. However, there's specific criteria for each. So I trade market maker models, Power 3, and quarterly theory. The way I see it is that market maker models presents price. Power 3 is a little bit of a mix of price and time, really is more on the price aspect. And then we have quarterly theory, which refines everything with time. Now, out of consideration for Day and just out of respect for him, I am not teaching anything in regards to quarterly theory for free or publicly. Reason being is because he hasn't taught anything publicly in regards to concepts such as sequential SMT, PSPs, SMTFs, none of that. He hasn't done any of that publicly. He has only done those within mentorships. So out of respect for him, I am going to do the same and keep quarterly theory concepts behind a paywall and just not share those publicly for easy access. And I'm just saying that as a heads up, as again, big aspect of my trading is quarterly theory, but nonetheless in this video, the big thing I want to go over is how I develop narrative and how I find Magellan liquidity utilizing market maker models and Power 3. And this will be done in a professional format. This is the type of format that I teach all of my lessons and market reviews on within my inner prospect group. So this is pretty much just going to be good insight and introduction to how I teach privately, doing this publicly on YouTube. So just as a reference, first thing we're going to do is share the trade recording. Unfortunately, I was only able to record half of it. Unfortunately, at the time of my entry, I thought I was recording. Unfortunately, I wasn't. I was recording a different video for my group when I forgot to record again afterwards. Anyways, only was able to record half of that. So we're going to share that trade recording. And then afterwards, we are going to be breaking it down in depth and in a lot of depth in regards to how market maker models and Power 3 interlink and how I use those to develop narrative for my trade and overall how I got my entry with it. So hope you guys enjoy and I'll see you afterwards.
If we'll only avoid any confrontation with the enemy, he'll forget his evil ways and learn to love us. All who oppose, all who oppose, forget his evil ways and learn to love us. All who oppose, all they say of them, they say we offer simple answers to complex problems. Well, perhaps there is a simple answer. Not an easy answer, but simple.
on to the lesson itself. So, Power 3 market maker models, how we can interlink them to master narrative. Few things you have to understand and study before you can move on with the rest of this video. The first thing you should do is go over the foundations of ICT. When I say go over, you really just need to understand them. You don't need to go back and rewatch stuff. You just need to understand the foundations of ICT so you can even understand the words that I'm saying in this video. Additionally, you should have already watched my previous Power 3 videos, even the old stuff. The old stuff from over a year ago. It's still useful, even though it's a bit outdated and not every single aspect of what I've talked about in those videos I still use. There's still great introductions to how Power 3, open low high close, and open high low close works. So please go watch those as well. Additionally, if you did watch the foundations of ICT, you should understand the market maker model, time frame alignment. If you do not, just do some research online, such as X, and you will be able to find some information on time frame alignment. So go do those first. Now, understanding Power 3 and market maker models. Now, Power 3s, they represent market maker models. So this candle right here, that is a Power 3. What makes it a Power 3? A Power 3 is an open high low close or a open low high close of a candle. That is what a Power 3 is. Again, if you watched my AMD versus Power 3 video, you understand the difference. So Power 3s, open high low closes, open low high closes, they represent a market maker model. So this entire candle is what a market maker model can be. Now, what I reference over here is that sometimes it's not just one Power 3. So maybe this is a daily Power 3. Sometimes it's not just one Power 3 where we see the entire delivery. Sometimes it's 2 to 3 where we have, one daily Power 3 before this one that represents the sell side of the curve, which we're going to reference later. And we have this daily Power 3, the up close candle, which represents the buy side of the curve. That is what I mean by sometimes it's 2 to 3. Now, what does that look like on our higher time frame? Well, before we actually get into what our lower time frame market maker buy model is, the first thing we have to do is get some insight in regards to what our higher time frame looks like currently. So going into the given day that we're trading this market maker model, we have to understand what the higher time frame looks like. We are looking right here. So for quick reference, what we're referencing back here, we can see very clearly that price is actively delivering from a monthly BISI, additionally a weekly for value gap as well. Specifically on YM, you can see right here that YM is the only asset class to trade into that given monthly BISI. Now obviously you can't see the candle before this candle right here, which is the fair value gap, but you can go back, look on your monthly chart. It's happening right as I teach this video, but take my word, it's a fair value gap. So YM traded into it, NQ ES did not. Fear, does that mean NQ and ES should? No, it can, but when we have specific criteria that is met, we do not need to. This in itself is already a higher time frame crack in correlation. A crack in correlation among correlated assets. A crack in correlation is very similar to SMT. So an SMT can be a crack in correlation, but not every single crack in correlation is an SMT. A crack in correlation can be something like a crack in correlation with EQ of the range, where YM trades the EQ or discount of any given range that we're trading in, while NQES does not. That is a crack in correlation. This is also a crack in correlation where YM trades into a fair value gap while NQES do not. That is also a type of crack in correlation. There are many different types of cracks and correlations. That's just a quick reference to what it actually is. But as we can see right here, weekly, monthly fair value gap gets traded into on YM. We fail to do so on NQ and ES. Boom, immediately higher time frame crack and correlation. What is also this monthly fair value gap? That's also a monthly low, aka, more specifically, the previous month low. So right now on the higher time frame, we have an SMT with the previous month low, with no SMT at the previous month high, while delivering from a monthly and a weekly fair value gap. Now, immediately bullish biased. But why? Let's get some more insight. Let's quickly reference what our higher time frame narrative actually looks like. So higher time frame narrative right now. I'm going to actually reference my trading view chart. So I'm going to quickly exit out of this and reference my higher time frame trading view chart. What does our higher time frame actually look like right now? What am I talking about? Back on this slide right here, our higher time frame narrative. As we know, price is constantly in a market maker model, constantly in a power 3. What is the power 3 that we're trading in right now? Well, on all time frames right now, what we're trading in is currently a yearly power 3. What have we seen within our yearly power 3? Well, when we look back at the beginning of the year, beginning of January, what do we see? Price opens, accumulates, followed by manipulation. Not just any manipulation, strong manipulation. This is no normal manipulation. This is very aggressive. Since the beginning of the year, we manipulated 6,000 points. 6,000. What do we understand about accumulation, manipulation, distribution? The stronger the manipulation, the stronger the distribution. Does this aggressive manipulation down make us bearish? No. Look at what we did on the end of that manipulation. We rebalanced this range that we've been trading in over the last, I think, 3-4 years. Yeah, 3 years. That range is rebalanced. That is where our strong manipulation had ended. And what have we been doing since then over the last few months? We have been strongly, very, very strongly trending higher. Now, fear, or maybe I should ask you guys, what, logically speaking, if price is already within our yearly power 3 manipulated down 6,000 points, why in your right mind would you anticipate price to rebalance this range? What is rebalancing a range in the first place? Rebalancing a range is only needed when we lack buy side or sell side delivery. This entire move lower is the sell side of the curve, sell side of the curve of a daily market maker buy model. Maybe you didn't even know that, but I covered it in a video about 2 months ago that we're currently within a daily market maker buy model. What I'm getting at here is that this entire move lower is the sell side of the curve of a market maker buy model. And what is this entire move higher? Buy side of the curve of the market maker buy model. This entire range is balanced out. We do not need to see discount of this range. Seriously, think logically. Why would we need to see discount of this range? This range is balanced out. We've had sell side delivery, buy side delivery. This entire range is already balanced out. If you want to get very, very precise here, look at where the sell side of the curve begins. Yeah, we're going to do a little bit of support and resistance for you. This is where the sell side of the curve begins. Back here. This entire move lower is sell side. This entire move higher is buy side. The only range that needed to be rebalanced was the point from we traded above right here. Right here. Put in the high. We just rebalanced this range. This is what rebalancing looks like. Sell side, buy side. Traded a little bit above the sell side of the curve. Rebalance that. What are we going to do now? Continue higher. What confirms continuation higher? Well, exactly what we just talked about right here. SMT the previous month low while delivering from a monthly and a weekly fair value gap. I bet you didn't know that. Now you do. Now, if we have clear higher time frame narrative that is bullish, what are we looking for in a lower time frame market maker model / lower time frame power 3? We're looking for, going into every single month, every single week, we want to see classic open low high close development, which is a bullish power 3 development. Last week, as of August 6, 2025, last week gave us the manipulation. Again, we're going to reference my chart again. I feel bad because I keep doing this. So last week, what do we see? I'm going to quickly turn off my indicator for a candle. What do we see last week? Well, the last week was the closing of a monthly candle. It's seen aggressive manipulation lower. Again, manipulation, not the start of a sell side move. Manipulation, a classic open low high close. What do we know about an open low high close? Open, low, high, close. So looks like this. Real quick drawing for you guys. It looks like this. This low, the open low, that puts in your manipulation. We see the exact same thing at the high of the candle more often than not. It is simply just a manipulation before the candle closes. And that's what we got last week. And last week, again, last week had ran out the previous month low on YM, giving us SMT the previous month low. So what is that? That is already our higher time frame manipulation for our next power 3. If we already manipulated last week within our weekly power 3, why would we need to manipulate any further within this given power 3, within this given weekly power 3? So if last week manipulated, we don't need to this week. It's that simple. So we were looking for higher prices and immediately going into this week. And this is what we're presented with today. So one more time, we're going to reference this before I just strictly stick to the Canva. As we can see, last week opened up, or Sunday opened up back here, and we immediately expanded higher. Why? Because we already did the manipulation last week. We immediately expand higher. So our focus going into this is simply to play continuation off of that. What do we see going into this day? This day, which is Wednesday. Well, technically yesterday, we had already rebalanced the range. So we expand higher here, return the discount on Tuesday just put in the manipulation for Wednesday. That is why we saw very minimal manipulation within this current daily power 3 that we're going to go over back here. So what we were referencing earlier, back here with any power 3, sometimes it can be multiple. This is what exactly has happened over the last 2 days, Tuesday and Wednesday. Tuesday, the sell side of the curve. The sell side of the curve back here represents a daily power 3, which was Tuesday, August 5th, 2025. The Tuesday, August 5th, 2025, daily power 3. That was this entire sell side of the curve. Then what do we see? Tuesday, August 5th, 2025, 6 p.m., the new daily open. Immediately what we do is run out the previous day low, specifically forming SMT of the previous day low. You can go look at YM. YM had failed to run out the previous day low, immediately giving us SMT, valid manipulation for then seeking out higher prices. And what do we get after that? Well, puts in the low, open low, SMT the previous day low, and then immediately starts expanding overnight, which ultimately leads us to London session, where London session then gave us our first stage redistribution. Now, I forgot to say the specifics here, but within the south side of the curve, our original consolidation started when our daily power 3 from Tuesday had begun. We accumulated almost the entire day, leading up towards New York Open, or I guess it was 10 a.m., with 10 a.m. then expanded lower, then about 11 a.m., 12 p.m., 1 p.m., retraced, giving us our first stage reaccumulation. Now very specifically here, there was only one stage reaccumulation here. Logically speaking, there's only going to be one stage redistribution. Obviously, this example that ICT gave us, that's exactly what had happened here. But usually there is multiple stages of reaccumulation and likewise for redistribution. We didn't get that today. We only got one stage of each. So if you missed an entry, you missed it. That's it. You did not get a trade. Anyways, original consolidation within the sell side of the curve at the beginning of the daily power 3, expand lower, first stage reaccumulation, new daily open, buy side of the curve begins. The confirmation of our smart money reversal is the SMT at the previous day low while being in discount of the weekly range. From there, we expand higher overnight during Asian session, where then London session roughly around here opens up, giving us our first stage redistribution, returning to discount of the overnight expansion range, which then ultimately leads us to New York Open, which has happened over here. Now, what does New York Open look like? Well, on my chart right here, I have 9 a.m. marked out and 10 a.m. 9:30 was roughly around here. Now, specifically going into this morning, I was open to both sides. Immediately, I was bullish bias, so I'll actually reference my pre-market analysis just to give you guys a little bit more insight. So for my pre-market analysis, I stated that with the previous week low delivering from the SMT of the previous month low, now the range we created after the Monday expansion, which was, you can't see it on this chart, but was from this expansion right here. We rebounced this range after delivering from the SMT, the previous month low. I could then validate price to expand here to previous day high and even previous week high, which was at the time, well, currently still is all-time highs. What would make me bearish if with the existing, because keep in mind at this point YM was in fact above the previous day high, which made me a little bit nervous. But as we know, narrative structure will overtake SMT. If structure is bullish, then well, bullish SMT is going to hold, bearish ones is going to be disrespected. So gave my bearish scenario after posting my bullish scenario on my chart. We can see very clearly here, previous day low SMT with the previous 90-minute low, very clear highs that we could draw to. That was my overall idea going directly into the morning. And how did I trade it based off of that? Well, how I traded based off of that was, well, immediately going into the morning, I was looking for longs. So directly going into 9:30, I was looking for longs. Unfortunately, no entry was given to me. Now, I was talking about time frame alignment earlier, which I apologize because I forgot to bring that up. But when it comes to time frame alignments, when it comes to a 1 hour PD rate, we focus on a 5-minute market maker buy model. We deliver from, SMT to previous day low, or just a daily PD rate. We focus on a 1 hour market maker model. There's another way to go about this, and it's where we have a 1 hour PD rate. We still focus on the 5-minute time frame. We don't necessarily need to see a 5-minute market maker buy model, but what we still are going to do is focus on 5-minute structure. So 2 reasons why we focus on the 5-minute time frame here, one of which was the fact that we're delivering from a 1 hour PD rate while being within a 1 hour market maker buy model. Additionally, having SMT with YM at this specific low. I mentioned it earlier, if you're like a minute ago, so if you're paying attention, you heard what I said. So go back and reference that if you understand SMT time frame alignments. Anyways, as we can see in the 5-minute time frame, there really was no optimal entry. Like literally, there was pretty much nothing you could have taken for longs unless you waited for the exact setup that I waited for. Now, what I was getting at back here was trade. Well, as we know, we're market maker model and power 3 traders. If we're within a 1 hour market maker buy model, we're delivering from a 1 hour PD rate. What would our focus be going into the next power 3? We referenced it right back here, meaning going in every single month, every single week, we want to see classic open low high close development. Wouldn't that mean the exact same thing? So if we are seeing that classic 1 hour market maker model, market maker buy model, wouldn't that mean that going into every single lower time frame power 3 within the higher time frame market maker buy model, we want to see classic open low high close for that power 3? Yeah. So that means going into the next 10 a.m. for a power 3, we'd want to see classic open low high close development. So what was that? What did that look like? Well, let's look back here. 10 a.m. opens, and what do? Immediately leave behind lack of manipulation. 10 a.m. opens, expands higher without having any manipulation below it. That is why if you FOMO in the long somewhere up here, you have stopped out. Why? Because we had no manipulation back here. We had no manipulation at the start of this 10 a.m. 4 hour power 3. That is why we ended up returning below it, running below the 10 a.m. opening. And we'll quickly reference the triad really quick. And we can see over here, we can see that YM, in fact, was forming numerous cracks and collisions at the lows. Now, initially I was going to say SMT. It is SMT, but it's not the type of SMT that I look for. It's not really that significant. Well, we can take note of the fact that beneath the 10 a.m. openings, which was right here, during the manipulation beneath the 10 a.m. opening, again, we already had the SMT back here, so this low is protected. We had seen the reversal after forming SMT with the previous 5-minute low, as we can see right here. And Q fails to run out the 10-20 low, while YM, in fact, does. From there, that is where the reversal had initiated. I guess I should say that is where the expansion had initiated. From there, what do we get? That's where we got our 5-minute CISD presented with a 5-minute classic 2022 buy model. Nothing too complicated. 5-minute CISD after forming a 5-minute crack and correlation, 5-minute fair value gap, classic 5-minute 2022 buy model. So what did I do once price was within that 2022 buy model? Or I would just say 5-minute fair value gap, because I don't really look at buy model at like classic ICT entry models. I really only enter off CISDs. Well, once price traded within that 5-minute fair value gap, that 5-minute 2022 buy model, all I did very simply was enter off the next 1-minute CISD. It's that so complicated. Entry there, stop loss at the low that we delivered from the 5-minute fair value gap. And where would my TP be? Well, at the only high that we can logically draw to. We're already above every single overnight low. We're already above, any sort of internal structure low. And my bad, I said lows. We're already above every single overnight high. There's no clear internal structure high that we target. Specifically here, there's nothing time-based we could target. The only time-based high we could target at this point is the previous day high. And that is our draw on liquidity. It doesn't matter if there's SMT there or not. If structure is bullish and you're trading in line with structure, then any bearish SMT that forms, we should anticipate to be invalidated. And any bullish SMT we form, obviously used with discretion, we should anticipate to hold, to overpower any bearish SMT. And that is what you want to focus on. And that was it. That was simply my entry. And of course, this was my execution. I posted the recording on my socials. And of course, you guys saw the recording earlier. And that was it. Again, 1-minute CIZ entry. That is my entry confirmation based off everything else I listed. I do my analysis. I do my higher time frame confirmations. My entry confirmation on a lower time frame is simply a CIZ, which I have a video on as well. And that is it. That is the lesson for today. Again, very, very simple. But if you're new to this, it may be a little bit complicated. So make sure you take notes. Make sure you rewatch. And of course, if you have any questions, comments, concerns, any of it, just list those in the comments below. Or feel free to join the server. Free server. You can ask any questions in there as well. We're all Power 3, market make model, and quarterly theory traders. So if you have any questions regarding any of those, feel free to join and ask in there. Otherwise, I'll see you guys all in the next lesson.